Hello friends, I welcome you on the YouTube channel of unacademy.com/plus website. Here I am teaching GST and income tax online. So if you or any of your relative or friend wants to study income tax online, then he can also join these classes. In these cases, he has to use, or you have to use, referral code Satbir and then join by paying rupees 499 rupees monthly. There are the various benefits which you can take by joining these courses online. First of all, you can learn from your favorite teachers online. You can also participate in doubt sessions and can ask your doubt live from the teacher. By one subscription, you can have unlimited access like GST, costing, accounting, auditing, all the subjects you can study just by one subscription. A real-time interaction with the teachers you can do and ask live questions from the teachers and take their answer. You can also ask your doubts in the live class, or every fourth class is doubt clearing class, so you can also note down your doubts and ask in doubt clearing class. You can also download the videos and watch offline. So there are various benefits which you can take by taking Unacademy Plus subscription. So I highly recommend you that you join these courses on unacademy.com/plus website. You have to choose goal CA exam and referral code CSADBIR and get 10% discount on your subscription. So friends, let's start our today's course on GST with multiple choice questions. Similar course I am also taking on Unacademy Plus website from 12 p.m. to 1 p.m. afternoon on the unacademyplus.com, and income tax course from 6 to 8 p.m. in the evening. So you can join those courses also, because there we are studying advanced concept of GST or income tax. The value of supply should include any non-GST taxes, duties, cesses, fees charged by the supplier separately, interest, late fees or penalty for delayed payment of any consideration for any supply of goods or services, subsidies directly linked to the price except subsidies provided by the central and state government, all of the above. So you have to choose your correct answer. When we study on Unacademy Plus, then you will receive 4 options. From those 4 options, you have to choose one of the option. Then we discuss the concept in detail and the correct answer. So here you just note down your correct answer on your copy. Whenever we start the class, then you should have a copy or pen with you, and whatever questions we are taking, you have to note down their answers, and at the end of the class you have to know how many answers you have correctly answered, so that you can test your knowledge, and if there is a need for improvement in any of the topic, then you can later on study those topics. So you just pause this video and replay this video again. Once you decide the correct answer, I am going to discuss the correct answer. Here section 15 of the GST Act says that the value for goods or services should be the transaction value, and certain items are included in the transaction value. Any taxes, duties, cess, fees, charges levied under statute other than the SGST, CGST and the goods and service tax compensation to state for loss of revenue act, if charged separately by the supplier to the recipient. So if any item is charged separately by the supplier to the recipient, then that item has to be included. Apart from that, any tax, duty or cess that is charged on the supply is also to be included, but not a CGST, SGST. Second inclusion is any amount that the supplier is liable to pay in relation to the supply, but which has been incurred by the recipient of the supply and not included in the price actually paid or payable for the goods or services. For example, supplier is liable to pay the transportation charges for the supply, but the recipient pays that charges, and in that case the transportation charges paid by the recipient has to be included in the value of supply to be charged by the supplier, and GST has to be charged on transportation charges also. Another inclusion is incidental expenses such as commission, packing charges, which are charged by the supplier to the recipient of a supply, including any amount charged for anything done by the supplier in respect of the supply of goods and or services at the time or before delivery of the goods, or as the case may be, supply of the services. Apart from that, interest or late fee or penalty for delayed payment of any consideration for supply has to be included. Suppose supplier has given a credit period of 30 days to the debtor to make the payment, but he pays after 2 months with interest, then the interest that is paid by the recipient, that is the debtor, has to be included in the price and GST has to be charged. But in this case, there is a provision in the GST Act that whenever the interest or late fees is received at that point of the time, GST has to be paid. Another provision is that subsidies directly linked to the price, excluding subsidies provided by the central state government. Here you have to note that only the subsidies which are directly linked to the price has to be included. If the subsidies are indirectly linked to the price, then those subsidies are not to be included. So if these are provided by the state, central government or state government, then you have to include these subsidies. You have to exclude these subsidies. So in this case, correct answer is D, because the value of supply would include any non-GST taxes, duties, cess, fees charged by the supplier. It will also include the interest, late fees, penalty for delayed payment of the consideration for any supply of goods or service. It will also include the subsidy directly linked to the price, except the subsidy provided by the central or state government. So the correct statement is all of the above are to be included in the price that is to be charged for the goods, and then GST has to be charged on that price. Next question: when can the transaction value be rejected for computation of value of supply? When the buyer and the seller are related and price is not the sole consideration. When the buyer and the seller are related or price is not the sole consideration. It can never be rejected when the goods are sold at a very low margins. So what are the cases when transaction value that is charged for the goods or services will be rejected by the GST officer, and then the valuation rule will apply? So you note down your correct answer, and then if you need any extra time, then you can pause this video and replay again. I am going to discuss the correct answer. So correct answer is contract price is more specifically referred to a transaction value, and that is the basis for computing the tax. However, when the price is influenced by the factor like relationship of the parties, for example, husband and wife are doing separate business, and husband is supplying to the business of wife and wife is supplying to the business of husband, so they might not value their goods or services correctly, so their relationship is influencing the price. Therefore, whatever price they will charge will be rejected and valuation rule will apply. Similarly, where certain transactions are deemed to be supply which do not have a price, that is price is no sole consideration of supply. For example, Mr. A delivered the goods to Mr. B, and Mr. B delivered the goods to Mr. A. So both are doing the barter transactions, are replacing the goods with each others. Here the transaction value could not be determined, so you have to refer the valuation rule in these cases. So in this case, correct answer is B. When the buyer and the seller are related or price is not the sole consideration, then the transaction value would be rejected by the GST officer, and the valuation rule will apply to value the goods or services under the GST. If you have any doubt at any point of time, then you can comment on my profile CS Satbir Singh on Unacademy.com. You can search on Unacademy.com CS Satbir Singh profile, and then on the discussion forum you can post your comment. I will try to answer your comment, and you can also join my special free classes on Unacademy.com. Schedule is also given on the Unacademy.com, so you can clear your doubt in the live class. So next question is, what deductions are allowed from the transaction value? Deduction offered to the customer subject to conditions, packing charges subject to conditions, amount paid by the customer on behalf of the supplier subject to conditions, freight charges incurred by the supplier for CIF terms of supply subject to conditions. So normally if a transaction value is taken, then certain deductions are allowed under the GST Act. So what are those deductions? You should try to answer the question within the time, so that in the exam also you can answer all the questions within the time, because you have practiced your questions. So you decide the correct answer and then replay. I am going to discuss the correct answer. Where supply discounts are allowed before or at the time of supply are included in the transaction value? Answer is no, provided it is allowed in the course of normal trade practice and has been duly recorded in the invoice. Therefore, if discounts are provided then before supply, they can be deducted from the transaction value, but these are required to be recorded in the invoice that is issued, because it's a normal trade practice to give discount to the party. Therefore, in this case, correct answer is A. Discounts offered to the customer subject to conditions are allowed to be deducted from the transaction value. Sometimes discount are provided after supply has been given to the customer. In that case, discounts can still be reduced, but there should be an agreement before the supply that this kind of practice is followed by the persons, and therefore discounts can also be given after the supply. There are certain conditions in the GST Act that you have to comply. Next question. Mr. Ram, located in Haryana, purchases rupees 10,000 heroin pens worth rupees 4 lakh from ABC wholesalers located in Punjab. Mr. Ram's wife is an employee in ABC wholesalers. The price of each hero pen in the open market is rupees 52. The supplier additionally charges rupees 5,000 for delivering the goods to the recipient's place of business. The value of such supply will be rupees 5,20,000, rupees 5,25,000, rupees 4 lakh, or rupees 4,05,000. So you take your time to calculate. Whenever I start this class, you should open Excel sheet in front of you, or alternatively you can also have a copy pen with you so that you can do all these calculations. So you must have done your calculations. So the correct answer I'm going to discuss. If you need extra time, then you can pause this video and replay again. Here we have discussed that the valuation rule are to be applied if the transaction value is to be rejected because the price is not the sole consideration or the parties are the related parties. So when the consideration either wholly or in part not in money, then the valuation rule has to be applied. Parties are related or supplied by any specific category of supplier. Transaction value declared is not reliable. So in that case, valuation rule will apply, like barter and exchange transaction, where one person exchanges goods with another person's. Then in that case, valuation rule will apply under GST. Similarly, where the transactions are listed in Schedule 1 of CGST Act 2017, in those cases also valuation rule will apply, because these are the transactions between the related parties. Similarly, there are certain transactions for which no consideration is charged, like which are mentioned in the Schedule 2. For these transactions, valuation rule will apply. So what is a related person under GST? Here, interestingly, normally all the definitions are always given in the Section 2 of any act. But in GST Act, related person explanation is given in the Section 15 subsection 5 of the CGST Act, which deal with the valuation. Here the explanation says, a person shall be deemed to be related person if such persons are officer or director of one another's business. Therefore, if the directors of the company do business transaction with each other, then they will be treated as related persons, and valuation rule will apply to value how much GST has to be charged on those transactions. Similarly, such persons are legally recognized partner in the business, where partner A and partner B are doing the business. Then the GST valuation rule will apply for the transaction between them. Similarly, employer and employees are also related persons. Therefore, if the employer gives certain goods to employee, then the valuation rule would apply, because in that case price would not be the sole consideration for the supply. Any person directly or indirectly owns, control, or hold 25% or more of the outstanding voting stock shares of both of them. Therefore, suppose Mr. A hold 25% equity shares of a company, then the transaction between the company and Mr. A would be the transaction between the related person, and in that case GST valuation rule will apply. Similarly, one of them directly or indirectly control the other. Suppose Mr. A control the business of Mr. B, then the transaction Mr. A and business of Mr. B would be between the related person and GST valuation rule will apply. Next is both of them are directly or indirectly controlled by a third person. Suppose Mr. A and Mr. B are being controlled by Mr. C. Then the transaction between Mr. A, Mr. B and Mr. C would be a transaction between related persons and GST valuation rule will apply. Together they directly or indirectly control the third person. Suppose Mr. A and Mr. B control the Mr. C, then transaction between them would be transaction between the related person. Similarly, when they are the members of the same family, then in that case also related persons and valuation will apply. What is the same family? It has also been discussed in the GST Act. Definition has been given in the GST Act for the same family, spouse and the dependents, brothers and sisters are also the family members. So in this case, here you can see that in this question Mr. Ram is in Haryana. Mr. Ram's wife is working in ABC wholesalers, that is the person with whom Mr. Ram is dealing, but Mr. Ram is not the related person of ABC wholesaler. ABC wholesaler and Mr. Ram's wife are the related person because they are the employer and the employee. But Mr. Ram and ABC wholesaler are not related person as per this definition. Therefore, whatever price is paid would be treated as the transaction value. Here, Hero Inc. worth ₹4 lakh pens are being supplied plus 5,000 rupees are additionally incurred for delivering the goods. Therefore, the transaction value would be 4,05,000. Thus, Mr. Ram and wholesaler would not be treated as related person merely because the spouse of the recipient is an employee of the supplier. Suppose in this case these pens are given to Mr. Ram's wife, then in that case the open market value of these pens is 52 and total 10,000 pens are being supplied. So 5,20,000 plus 5,000 are additional charges for delivering this product. So 5,25,000 would have been the correct value. But in this case the product are being supplied to Mr. Ram and not to Mr. Ram's wife. Therefore, they are not the related person. Next questions. What will be the value of supply if Mr. A supplies Sony television sets for ₹1,85,000 along with the exchange of an old TV and the price of the Sony television set without exchange ₹2 lakh? The open market value of the Sony television set is ₹1,85,000, 2,15,000 or 2,15,000. So you can take your time to arrive at correct answer, but I'm going to discuss correct answer. If you need additional time, then you can pause this video and replay again if you are watching the recording of this video. Friends, here you have to refer section 15(4) of the CGST Act read with Rule 27A of the Central Goods and Service Tax Rules. Rule 27A of CGST rule, where the supply of goods or services is for a consideration not wholly in money, the value of supply shall be the open market value of the supply. So when the goods or service you are not receiving the whole amount in money, then you have to refer the valuation rule, and that valuation rule say that first of all you have to take the open market value. And in this case you can see that the Sony television sets are sold along with exchange of old TV. Therefore, the whole of the amount is not in money. Therefore, you have to refer the valuation rule, and as per the valuation rule, you have to take the open market value. Open market value of these Sony television sets is ₹2 lakh. Therefore, correct answer is B. That is 2 lakh has to be taken as the value of the supply. On this supply, you have to charge the correct GST rate. Okay, next question. Whether any reason to believe or evidence is required for initiation of audit under section 65 by GST authorities. Reason to believe is a prerequisite for initiation of audit under section 65. Proper evidence is a prerequisite for initiation of audit under Section 65 A and B. No, Section 65 does not specify any such requirements. So Section 65 deal that GST authorities can audit taxpayer so that they can arrive at the correct value, or the GST rate are being charged, or input as carried is being correctly availed by the person. To identify all these cases, they can do the audit. But whether the reasons to believe is required by the GST authorities that the person is doing a fraudulent transactions or is misrepresenting the facts, or they require no reason, and they can order the audit of the taxpayer books of accounts. So you can take more time if required by pausing this recording, and I am going to discuss the correct answer. Here correct answer is point number D, that is no, Section 65 does not specify any such requirement. Therefore, Section 65 of the GST Act does not say that the reason to believe is required before conducting the audit of the taxpayer. So the commissioner can order audit under Section 65, although he has no reason to believe that the person has done any fraudulent transactions, or is going to misutilize the input as credit, or is dealing in any way which is not as per the GST Act and rule. So no reason is required. He can order audit at any point of time. Audit can be undertaken in case of a taxable person, unregistered person, registered person, or all of the above. So under GST Act, if the audit is being ordered by the GST authorities, then whose audit can be conducted? So you can take more time if required. I am going to discuss correct answer. Here correct answer is the registered person. The person should be registered under the GST, only then audit can be conducted by the authorities under Section 65. If the person is not registered, then there are the certain other actions that can be taken by the GST officers under Section 73 or 74 etc. But the audit cannot be done under Section 65. Audit can be done of only those persons who are registered under the GST Act. Next question. Recovery of the amount payable by a defaulter can be made from customer, bank, post office, or all of the above. So if the amount of the GST not paid by the taxpayer, then from whom this amount can be recovered? Here correct answer is D, that is all of the above. Therefore, if a person makes a default in payment of GST, then the GST can be recovered from the customer of the defaulter, because if the person is liable to pay to the GST defaulter, then the amount can be directly recovered by the GST officer from that customer. Similarly, if the person has a bank account, then the notice can be given to the bank by GST officer that the amount has to be paid directly to the GST department and not to the GST defaulter. Similarly, to the post office, notice can be given by the GST officer and recovery can be made. Fully amount due cannot be paid through installments. Self-assessed tax shown in return, short paid tax for which notice has been issued, arrears of the tax, and concealed tax. So if you have any question at any point of time, you can talk to me on my profile Satbir Singh. You can write down your comment, or while I am doing the live class, then also you can do live chatting with me if you have any question on GST. So here the correct answer is A, that is self-assessed tax shown in the return cannot be paid in installment, that has to be paid as per the due date specified for that. Apart from that, other amounts can be paid in installment, like the GST officers find out that the amount is due from the taxpayer and he makes an order, and and calculate some demand on the taxpayer, and the taxpayer is not in a position to pay the demand immediately, then he can apply to the GST department that the amount has to be paid in the installment. So if the GST officers allow him, then the amount can be paid in installments also. But whatever amount is self-assessed and by him in his GST return, that cannot be paid in installment, that has to be paid as per the due date. Who is liable to pay tax if the business of an individual is discontinued before his death? So before the death, business is discontinued. Board of the directors or the manager, any member of his person who is willing to pay, legal representative of the taxable person or the employee. So you can take more time by pausing this recording and replaying again. I am going to discuss correct answer. Here correct answer is C, that is the legal representative of the taxable persons would be liable to pay if the business of the individual is discontinued. When will the input and or capital goods sent to job work become a supply? When the input and or capital goods sent to job worker are not received within 1 year or 3 years respectively. When the input and or capital goods sent to job worker are not supplied with or without payment of tax from the job worker's place within 1 year or 3 years respectively. Both A or B or none of the above. So when will the input or capital goods sent to job worker will become the supply? If you need more time, then you can pause the recording and replay it again. I am going to discuss correct answer. Here correct answer is C, that is both A or B. That is when the goods are sent to the job worker, then these are to be received back within the 1 year in case of the input and within 3 years in case of the capital goods. Or these can be supplied from the job worker premises directly to the customers within 1 year or 3 years. If these are not supplied, then from these premises or are not received back from the job worker premises within this time, then this will be treated as supply, and the principal person, that is the person who has sent the goods to the job worker, is required to pay GST on these inputs or capital goods which are sent to the job worker and which are not received within 1 year in case of input and 3 years in case of capital goods, or are not supplied from the business premises of job worker. Next question. Mr. X has sent his goods to Mr. Y on job work on 7th May 2017. From when it will be considered as deemed supply if not received back within 1 year, further extended by 1 year. On 6th May 2018, 7th May 2017, 3rd November 2018, not taxable. So the goods are not received within 1 year, then what would be the date of supply, because GST has to be paid when as per the date of the supply. So you can take more time by pausing this recording, but I am going to discuss correct answer. Here correct answer is 7th May 2017, because the date on which goods are sent would be treated as the date of supply if these are not received back within 1 year or 3 years. 1 year is in case of the inputs and 3 years in case of the capital goods. So you have to pay GST as per the date of 7th May 2017 along with interest. If these goods are not received within time specified under section 143 of the GST Act. Who should discharge the liability of GST on the scrap generated during the job work? So goods are sent to the job worker for repair, maintenance, or for other work. If some scrap is generated during that process, on that who will pay the GST? Whether the job worker if registered, or the principal if job worker is not registered. C, always principal. D, option A or B. So here the correct answer is D, that is option A or B. When the goods are sent to the job worker and scrap is generated, then if job worker is registered, then he can pay the GST. If job worker is not registered, then the principal has to pay the GST. It is the responsibility of the principal that he has to pay GST on the scrap that is generated. Whether the detail of goods supplied from job workers' premises need to be included in Form GST ITC-04, required for unregistered job worker, required for registered job worker, not required, both A and B. Here correct answer is D, that is both A and B, required for unregistered job worker as well as registered job worker. So when the goods are sent to the job worker, then the detail of the goods, that is the input or capital goods being sent to the job worker and received back from the job worker are required to be reported to the in Form GST ITC-04 on GST portal. So whether the goods are sent to unregistered job worker or registered job worker, both of them are required to be included in this form. Transfer of the business under GST would include sale, lease, license, or all of them. When will it be treated to be transfer of business under GST? Here correct answer is D, that is all of the above. Whether it's a sale or lease or license, it would be treated as transfer of the business. Who is liable to pay the tax in case of transfer of the business? Transferor, transferee, both jointly and severally, or jointly. You can take more time if required to answer this question, but here correct answer is C, that is both jointly and severally, that is the transferor and transferee. Both are liable to pay the GST if before transfer there is some GST due on that business, then both of them are liable to pay that GST. Deemed export provision is applicable only to goods. Deemed export provision is applicable only to services. Deemed exports provision is applicable both to goods and services. Deemed export provision is applicable when the goods and services apply to special economic zone unit or developers. So what is deemed export under GST and to whom these provisions are applicable? On export of goods and services under GST, I have covered a complete chapter which is available on unacademy.com under my profile C. Satbir Singh. You can refer that chapter. So here correct answer is A, that is deemed export provision is applicable only to goods under GST because there is a specific notification that is being issued by the government that these supplies of goods would be treated as deemed export. What are the conditions applicable before claiming deemed export? Goods must be manufactured in India, goods must not leave India, goods must be notified by central government, or all of the above. So what are the conditions applicable before claiming deemed export? Here correct answer is all of the above. So in case of deemed export, goods must be manufactured in India, goods must not leave India because that's why it's being called a deemed export. If the goods would leave India, then it would be called simple as export, not a deemed export. Third condition is goods must be notified by the central government. So then it will be treated as deemed export. When can assistant of expert be taken? During scrutiny, inquiry, investigation, before passing order, or all of the above. So if the GST officer is not able to determine the correct value, or he needs some assistance of an expert, then at what stage he can take assistance from expert so that he can do scrutiny, inquiry, investigation, or he can pass order, or all of the above. Here correct answer is E, that is all of the above. At all of the above stages, a GST officer can take assistance from an expert during scrutiny, inquiry, investigation, or before passing the order also. Whether prosecution can be initiated against the following persons. So whether following person can be prosecuted: member of the appellate tribunal, since they did not follow the case law which was decided by the president, leading to incorrect decision by such member of the appellate tribunal; adjudicating authority for not following the order of the commissioner when such work was delegated to such adjudicating authority; vindicative action taken by departmental officer while discharging his function. The action was, however, in favor of the revenue. So on this chapter, prosecution, demand, inspections, I have also covered a complete lecture which is available on my profile Satbir Singh on unacademy.com. So you can refer that chapter, and if you have any question you can ask in my live class which is from 12 p.m. to 1 p.m. on unacademy.com. If you want to do a course on income tax, then in that case my class timings are from 6 p.m. to 8 p.m. in the evening. You can also join that class. Apart from that, on unacademy.com/plus website you can also ask your doubt. Every fourth class is a doubt clearing class, so you can ask your doubt in that class. Here correct answer is C, that is the vindicative action taken by the department officer, though actions are in favor of the revenue, even though the prosecution can be initiated against that person. What are the circumstances when the information collected by GST officer can be disclosed by such GST officer? When serving show cause notice to an SSC, to the authority empowered to take disciplinary action, when inquiry is being conducted by such disciplinary committee, to an officer appointed for the purpose of conducting the audit. B and C, A, B and C. So normally the information collected by GST officer should not be disclosed, but there are certain circumstances where the information in the possession of GST officer can be disclosed. So you can decide and then replay the video again and pause it. So the correct answer is E, A, B and C. So GST officer can disclose the information when serving the show cause notice to the SSC. He has to disclose the information, and to the authority empowered to take disciplinary action when inquiry is being conducted by a disciplinary committee, then he has to disclose the information, or to the officer which is being appointed for conducting the audit under GST. Whatever information in the hands of GST officer has to be disclosed to the audit team. Whether validity of service of notice under GST can be called into question when the SSC has submitted himself to the adjudication proceeding pursuant to such notice. Yes, no, depends on the facts of the case. So sometimes it happens that the notice is being served to the SSC, and if he takes action on the basis of that notice and submits some reply to the adjudication authority, then can the later on he say that the notice was not valid? Here correct answer is no. Once he participate in the proceedings, then he later on he cannot question the validity of the notice. So it's very important that you check the notice is as per the GST Act and law. If you think that the GST notice that is being issued is not valid, then you should challenge the notice initially, and later on you cannot say that the notice itself was valid when the order has been passed by the GST officer. When can mistake apparent on the record be corrected? When mistake noticed by authority passing the order, when mistake pointed out by the corresponding officer of the SGST, when the mistake pointed out by the person affected by the order, all of the above. So if there are the mistake which are apparent on the face of it, then how these can be corrected? So you can pause the recording and replay it again. I am going to discuss the correct answer. Correct answer is D, all of the above. So mistakes which are apparent on the face of the record can be corrected when it is being noticed by the authority who has passed the order, whether the GST authority or the revision authority or the any other authority who has passed the order. If it find out that there is a mistake in the order, then it can be rectified. Or when the mistake pointed out by the corresponding officer of the GST, if the GST officer notices that the order has not been correctly made, there is a mistake, then it can be ordered to be corrected. Or when the mistake are pointed by the person affected by the order, in all those cases mistake can be corrected. Within what period should the mistake apparent on the record be brought to the notice of the authority? 3 months, 6 months, depends. 3 months in case of clerical error or arithmetical error, and 6 months in any other case. So there is a period for rectification of mistake if it is apparent on the face of the record. But within how many within how much time this has to be brought to the notice of the authority? So here correct answer is C. It depends upon it depends if it is a clerical error or arithmetical error in the order, then within 3 months a mistake has to be brought to the notice of the authority. In any other case, it's 6 months. Can the government make retrospective rules? Yes, but cannot impose penalty for controversial rule for retrospective period. Yes, and also can impose penalty for controversial rule for retrospective period. No. So under GST, whether the from the back date the government can amend any rule and impose penalty. So you can decide the correct answer if you want more time. Correct answer is A. Yes, but cannot impose penalty for contravention of rule for retrospective period. So from the back date it cannot impose penalty. Next question. What is the effect if the parliament annuls the rule notification issued by the government? That is, the parliament deletes the rule or notification which is being issued by the government. It is as good as no rule notification were issued by the government. B. The rule notification issued by the government would be effective for the period from the date of issue till the date they were annulled by the parliament. There would be no sanctity for the action taken by the department SSC on the basis of the rule notification for the period from the date of issue till the date of annulment. The action taken by the department SSC on the basis of such rules would be void from the date of annulling the rules notification. E, A and C, F, B and D. So if the rules or notification are being deleted by the parliament, then what is the effect of the deletion of those rules? So you can take more time if required. You can pause the recording and decide the correct answer, then replay it again. Here the correct answer is, it is as good as, correct answer is B and C, that is the rules and notification issued by the government would be effective for the period from the date of issue till the date they are annulled by the parliament. So for that period the rule or notification would be valid, and there would be no sanctity of the action taken by the department SSC on the basis of the rule notification for the period from the date of issue till the date of annulment. What are the methods to serve the notice order documents under GST? How the notice has to be served or order or document has to be served? Only by registered post with acknowledgement due, by speed post acknowledgement due not necessary, by courier with acknowledgement due, a common portal, that is gst.gov.in, or these have to be served on email provided at the time of registrations, or by publication in the newspaper circulating in the locality. All of the above except C, all of the above except B. So it's very important that when you receive a notice, you have to check whether that has been correctly issued or has been correctly served. So if it is not correctly served or not correctly issued, then you can challenge that notice that is not valid. But what are the various modes under GST Act by which notice can be served or order or documents can be served to the assessee? Here correct answer is G, that is all of the above except B. That is, the notice cannot be served by speed post, acknowledgement due not necessary. That is not correct. Otherwise, notice can be served by register post or on issuing on GST common portal, that is gst.gov.in, or it can also be served on the email provided at the time of registration or publication in the newspaper circulating in the locality. It can also be sent by courier with acknowledgement due. Would notice order document be deemed as served though registered post, speed post is not received by intended person? So what are the cases when the registered post or speed post with acknowledgement due not received by the person? No actual service is necessary. There is no concept of deemed service. Yes, it is deemed to have been received by the addressee at the expiry of the period normally taken by such post unless the contrary is proved. So the notice has not been received by the taxpayer. Can it still be assumed that it has been served on the assessee? Here correct answer is B. Yes, it is deemed to have been received by the addressee at the expiry of the period normally taken by such post unless the contrary is proved. So there is a deemed service of notice under GST. When the movement of the goods is caused by unregistered person, the Eway bill shall be generated by unregistered person himself, the transporter, either of them or neither of them. I have covered complete chapter on Eway bill under GST, which is available on my profile Satbir Singh on Unacademy.com. You can refer to that chapter, complete course on GST. You can search my profile Satbir Singh on Unacademy.com. So here correct answer is C, that is either of them. Under GST, Eway bill has to be made when the consignment value for the goods exceeds rupees 50,000, including GST and the amount. If it's for taxable and exempted goods, then the exempted goods value has to be excluded, and only taxable supply value has to be included to check the consignment value. So in case of unregistered person, either the unregistered person can himself make the Eway bill or the transporter can make the Eway bill. Mr. A, chartered accountant, provides audit service to a trust. He has not charged GST, but the department find out the same during the audit. What will be the GST liability if the audit fees charged was 75,000, 9,000, 13,500, 11,440, or 8035? So here the correct answer is in the rule, valuation rule. If the value of the supply is inclusive of IGST, CGST, IGST, or UTGST, the tax payable will be calculated by the back calculation as follows. Tax amount equal to value of inclusive of tax multiplied by tax rate in percentage of IGST or CGST plus UTGST or SGST and divide by 100 plus sum of applicable tax rate in percentage terms. It's being written in rule 30 of CGST and SGST rule. Here you have to note that the provision apply only to the value of supply including GST. The rule does not say that the value is deemed to be inclusive of GST. So if the value is including GST, then only this rule will apply. So you cannot say that under reverse charge whatever amount is being charged that is inclusive of GST, you have to charge the GST separately. So in this case you can say that the charter accountant, whatever value has been charged was inclusive of GST. So you have to calculate the amount by back calculation. 75,000 divided by 118 into 18, because on audit services there are 18% GST as of now. So you have to treat this value as inclusive of GST and calculate the GST of 11440. Mr. R has issued a tax invoice for moving the goods from his office to Mr. A shop situated at a distance of 8 km. Mr. A will further send the said goods to Mr. Z. The invoice value of rupees 49200 plus 8856 as GST, and total amount is 58056. Is Eway bill required by Mr. R? If yes, why? Correct answer A. Yes, Eway bill shall be issued since the consignment value is rupees 58056, more than 50,000. Even if it is 8 km distance, Eway bill will be required. No, Eway bill need not be issued since the consignment value is 49200, less than 50,000. No, Eway bill shall not be prepared by Mr. R since the goods are in transit only, and Mr. A will further send the goods to Mr. A. Mr. A will be required to prepare Eway bill. No, Eway bill shall not be issued by Mr. R as the distance is less than 10 km. So on Eway bill there is a complete chapter that I have covered, which is available on my profile Satbir Singh on Unacademy.com. You can refer to that course. So here I am going to discuss correct answer. So consignment value meaning is defined under GST Act, Rule 138 of CGST rules. Explanation 2 says, for the purpose of the rule 138, consignment value of the goods shall be the value determined in accordance with provisions section 16(5) declared in the invoice, bill of supply, delivery challan. So whatever value is declared in the tax invoice or bill of supply, delivery challan, it is deemed to be a consignment value. As the case may be, issued in respect of the said consignment also include the CGST, SGST, UTGST, IGST and cess charge if any. So in case of bill of supply, there is no GST extra charge, but in case of the tax invoice, GST is also charged. So you have to take the invoice including GST. But in case of bill of supply, delivery challan, there may not be the CGST or SGST charged. Therefore, in this case, if the value of supply include both taxable supply and exempt supply, then the value of exempt supply of goods has to be excluded. Have to be excluded. In these questions, you are also you have to ensure when will the Eway bill will be completed. When does the complete Eway bill not required? Because in Rule 138 it says that provided also that where the goods are transported for a distance of up to 50 km within the state or union territory from the place of business of the consignor to the place of business of the transporter for further transportation, the supplier or the recipient, as the case may be, the transporter may not furnish the detail of conveyance in Part B of Form GST WB-01. So if the goods are being given to the transporter for further transportation within 50 km, then you need not prepare Part B of Eway bill, but Part A is required to be filled. In Part B, you are required to fill only vehicle numbers, so you are not required to fill vehicle number if goods are only transported to transporter for further transportation. So in this question, you check that distance is within 8 km and the goods are being transported to Mr. A for further transportation to customer. So here Eway bill is required to be made. But Part B, that vehicle number, is not required to be filled, and consignment value exceeds rupees 50,000 including GST. Therefore, GST is required to Eway bill is required to be made as per Rule 138 of CGST rules. Mr. Anil has recently started a retail trade of daily use cosmetic items. Different products have different prices. He asks clarification from you with regard to the value of the goods, at what value the supply of goods is charged to GST, MRP, market value, net realizable value, or transaction value. Here correct answer is as per section 15 of the CGST Act, that is the transaction value has to be taken for the goods or services that are being supplied. Mr. A was liable to pay tax of rupees 20,000 on 20th July, but he failed to pay the same. So on 20th July, GST has not been paid. Later, he decided to pay the tax on 25th September. So in the month of September, GST has been paid. Section 50 of the CGST Act says that every person who is liable to pay a tax but failed to pay the tax or any part thereof within time shall pay interest at 18% for the period for which tax or any part thereof remains unpaid. Therefore, tax has to be paid. Interest has to be paid if the default is made in payment of GST. So interest has to be paid at the rate of 18%. What would be the interest amount under section 50 of the CGST Act, and how would it be calculated? Rupees 900 interest amount at the rate of 18% for 3 months. Rupees 671 interest amount at the rate of 18% on daily basis for 68 days. Interest amount 661 interest at the rate of 18% on daily basis for 67 days, or interest at the rupees 651 at the rate of 18% daily basis for 66 days. So if you want more time to answer this question, then you can pause the recording and then replay it again. Here the correct answer is every person who is liable to pay tax in accordance with the provision of the GST Act or the rule made thereunder, but fail to pay the GST or any part to the government within the period prescribed, shall for the period for which the tax or any part remains unpaid, pay on his own. So interest has to be paid on his own. Government will not demand that interest. Every taxpayer is expected to pay the interest and calculate the amount of interest and pay on his own at such a rate not exceeding 18% as may be notified by the government on the recommendation of the council. So maximum 18% interest has to be paid. Interest under subsection 1 shall be calculated in such manner as may be specified from the day succeeding the day on which such tax was due to be paid. So for example, for the month of April, tax has to be paid by 20th May. If on 20th May tax is not paid in case of the monthly return filer, then from 21st May the amount of interest would be calculated. So in this case, correct answer is C, that is rupees 661, that is interest amount at the 18% on daily basis has to be calculated for 67 days on 20,000 rupees, because 20,000 was not paid at the rate of 18% from 21st July to 25th September. So there are total 67 days. Therefore, if you notice that the calculation has been made from 21st July to 25th September. So in this way you have to calculate the interest under GST. Mr. A registered under the composition scheme of GST whose aggregate turnover in the preceding financial year is rupees 1 crore 20 lakh. He is doing the following. He is preparing the tax invoice and is charging 1% tax and showing on the face of the invoice. He has total 40 customers, out of which 39 customers are in the same state where he is registered and one customer is from the another state. He is engaged in supply of goods through e-commerce operator who is required to collect the tax at source under section 52. He is filing GST 4 return annually. Which of the above are not permissible for supplier registered under composition scheme 1 and 2, 1, 2 and 3, 1, 2, 3 and 4, 1 and 3. So which of the statement is not correct? Under section 10, GST composition scheme is available. So when a person opt for composition scheme, then what he can do and he cannot do. On this composition scheme, complete lecture is available on my profile Satbir Singh under on unacademy.com. So on unacademy.com/plus website, you can refer to that course. So you are recommended to join these courses on Unacademy Plus website. So in this case, correct answer is B. That is, if a person's opt for composition scheme, then he cannot charge GST and he cannot issue tax invoice. He has to issue bill of supply. So this statement is not correct. Second statement is also not correct. He cannot make an interstate supply if a person opt for composition scheme, and he cannot supply the goods through e-commerce operator who is required to collect TCS under section 52, because in that case the consideration would be collected by the e-commerce operator. So in composition scheme dealer cannot supply through e-commerce operator, but a composition scheme dealer can file GST-04 return annually, and he has to pay his taxes in GST CMP 8 form on quarterly basis, and he can file return annually. So the statement 4 is correct, but first, second and third statement are not correct. So friends, if you have any doubt at any point of time, then you can contact me on unacademy.com/plus website. But you are highly recommended that you join unacademy.com/plus website for 1 month and see that the benefit or the value this website can add to your knowledge or to your course. So for just 499 rupees, you can join unlimited classes on unacademy.com/plus website. You have to use referral code CSATBIR, so that otherwise for this class you have to pay 3500 rupees, but since you are using referral code CSATBIR, therefore you can join just by paying 499 rupees monthly. You can learn from your favorite teacher. You can participate in doubt clearing sessions. In one subscription, you can have unlimited live classes on costing, accounting, auditing, GST, income tax, etc. Real-time interaction you can do with teacher. You can ask your doubt in live class. You can download the videos and watch offline. Apart from that, you can get 10% discount if you use referral code CSATBIR, and you have to choose Gold CA exam on unacademy.com/plus website. So friends, I will meet you in live class on GST on Unacademy Plus website. Thank you.